Good day, everyone. Let's examine one of the most interesting and, in my opinion, powerful indicators that shows you levels that clear up the mystery of which levels are stronger than others, which one should I trade, what I wait for, what is my target, etc. This is a very comprehensive indicator. Let's start with U.S. oil. You can do any instrument up to you, but this is U.S. oil. And this is a daily candle, as you see at the bottom, starting from around 99.86 area or 80, and the top, the highest was around 104.20, and there's the body in the middle, and you see it's still moving. You see it's still in the move. This doesn't show you anything, but if I show you the volume associated with each tick or move that happened throughout the day, you would see this is the volume profile that we created, and I like it. It's something dynamic. You can sharpen the edges as you see. You can smoothen the edges as you see. And just saw how I maximized it, and minimized it. Now, seeing this, I know there was a heavy volume created between 104.20 to this level here, right here. There is now more volume coming in, as you see. These areas are growing bigger if you see them. I don't know if you're paying attention to this. There was less volume between 103.20 to 103.60. There was this volume here, darker blue, sorry, lighter blue and then darker blue. There was a little bit of less volume. Green, more volume, and then red. This is the point of control of this today, 104.20 area. And around the open, it opened right at the bottom of this cluster right here. So there was also volume. So each level of these means there was a list of volume, interest in trading the market here, less interest here, more interest here. So there is these valleys and these bellies and these sharp edges and colors. And volume profile, of course, you could just right click and go to studies and change it. You can change this into different colors of your choice, up to you. I like it the way it is, right? But it is very dynamic. You could also do this, and you will see that the volume profile overlapping the candle, which means double click there. I don't want to overlap the candle, so I'll keep it under the candle. Okay, so that is the introduction to volume profile. And the volume comes from amount of contracts bought or lots bought versus sold. So the more the volume, the more the interest, the more the market visits that area, the more interest there is, the more volume in that level. So this level here, for example, the red one, it's across the entire day. So between around 102.40, 102.40, there was a heavy volume. Now, how do I know what the market did at that time? This is only one candle. Let me bring more, and you'll see this is 2 days now. This is day 3, day 4. Yet, I need to know 104.20 what happened for today. So if I look at a smaller chart, for example, 987 tick chart, 104.20 from today started. Actually, I'm looking at the bottom. This is the 987 tick chart, smaller chart. So each candle is 987 ticks or pips in the move. So if you notice 104.20 level, the market visited a number of times. A bunch of times here, poked into it here. So there's a reason why this level was red. This level orange, same thing, a lot of visitations here. And this is not about how to trade it yet. This is to introduce you to the volume profile and what it means. Each level means something. The less volume, The color changes, of course. In this case, is gray. It's light blue. So you see fast movements into that. There's less resistance or support in that area, so the market tends to move. That's why we call them suction tubes. There's less resistance. There's always support when it comes to a high level before it gets to a high volume level. There's always support or resistance when try to escape that level. So, and this is true for, let's say, US oil. If I look at a 60-minute chart, let's do a step by step. I'm going to fast forward this into, look at this. You notice the red area here, for example. This is a different chart, still US oil, but this is an hourly chart. It goes back a few days, 17th of March, as you see, 16th, whatever. But you see this red area here. You see how many times the market went through it. So that means there was heavy volume involved in the area. So it escaped it lower. It touched a low level between the two highest volume areas and bounced back up. But let's continue. Let's fast forward. Let's see examine what's happening. Look at the market going up. Do you see a resistance on top created by volume profile from the past? This is historic volume profile, and it also gets updated while the market goes through it. So it's very powerful indicator. See how the market tried to escape this area going to go up, but it rejected it and came back down. You have to be aware of these levels. If you have them plotted, you would know. And you see how the bottom stopped right at the top of that red. Now it's trying to break it. So let's fast forward and you look for yourself. See how the market stopped again at this level? This here, there's a distinguished level between the upper volume, lower volume. Okay, let's examine more. So maybe you'll try to break it lower. That broke it lower, it stopped again at the next level at 100. See? And now it's breaking it. See how the market is behaving? See how it moved fast into this heavy volume zone? This is on the hourly chart. And see how it bounced from the bottom of it, bouncing back up. And you notice how it moves faster in within the low volume levels because there's less resistance, as I mentioned, less support. Okay? So there, it's coming into the next level. You see that? And you notice it's trying to reject it. Watch this. And it really rejected it. Okay? It's going back up again. It poked into it and rejected it again. Maybe now it's going to break it. See? Just keep an eye on these levels and see how important they are for your roadmap into knowing the next level of support and resistance. I'll keep doing this for your education. See how it's trying to get into major level above 106. See, it's trying to break it. It failed initially. It broke it. 107. It tried to break into 108. It's heavy volume, right? It failed. You see that? Let's keep fast forwarding. And there was a break through that red zone because it was touched multiple times. Maybe there was news or announcements. I don't know. All I know, volume profile is key to looking at it. And again, you can start with the daily. That is more comprehensive. You can break it down to the hourly and then to the minute charts or tick charts, etc. Do you see how it stopped twice? It stopped here for a quick bounce down and stopped at the bottom for a quick bounce up and then broke it. It went up to this cluster. It stopped it, trying to now to break it higher. Maybe it'll break it higher. It tried to poke it again. See, it tried to poke it 3 times and now finally broke it up. And now where you see where it stopped? 111. This is the rejection area, right? See that? So keep watching this and you will see what we do, what we see on a daily basis. Okay? This is very important for your knowledge, very important for you plotting the numbers. If you're a scalper, if you're a swing trader, the idea is the same. Let me fast forward more. Let me see some more levels. Sometimes there is no levels. You don't have to stick with the trade, and you can switch to a different instrument. You have a choice. You have multiple choices, multiple instruments that you look at. The CFDs, the energies, the forex pairs. For example, we have pound US. This is the daily on the pound US. I'll still go back to the crude anyway. You see how the market, the pound stopped a couple of times here, and then the next one tried to poke it and stopped again, coming back down. If I go this on the daily, and sorry, here for example, and fast forward this one, you see how the bottom area bounced from 1.24. Now it's breaking it. You see there's fast movement because there's low. Once you get into these low volume zones, the market tends to move faster. Okay, see how it stopped, trying to escape higher. So there's a lot of details into this, but again, with time, with education, with our support, you'll get to it. Now I'm back to the US oil. Okay, this is applies the same to the futures markets. We do a lot of crude trading. See how it stopped at the top of that level and try and break it again, and then now maybe it's supportive here. Just looking, you get the idea. Let me fast forward some more. Okay, let's go for some more. Oh, sorry, let's go for some more. Sorry, getting out of the zone. Okay, continue. See how it stopped, trying to break it. It is very important, folks, to know your levels. Okay, to know how the market is moving, to know why the market is moving, where's the next level, where's your next support and resistance. Imagine if you are using simple indicators or other indicators or even advanced indicators that you have, and they are lined up with all these volume profile levels. Of course, we will go through some more details later in the next videos, because we have our own indicators that could line up with these and help you out. But you see what I mean. See how the volume is accumulating while the market is moving. This is important for your knowledge and to know where is the next level and where is the next target. In most cases, once we get into a level of volume, most likely the market tends to continue through it to end it either slower or faster. Doesn't matter. It depends on the day. Okay. So here's the overall look, as you noticed, and see how the volume profile is moving with the market. And if I decrease the number of candles or chart into this zone, you see how the volume profile corresponding with whatever you have inside this screen. The more you bring, the more you see, the more comprehensive it is. In a nutshell, my rule of trading is that if you need to have a volume profile that you can depend on, you will need two legs of movements at least. Two legs meaning this is one move, this is one leg. Sorry, this is one leg. Here, one, down, up, one leg. Not enough, but two legs, meaning the market has moved into this area twice at least. So you have more comprehensive levels. Of course, you will trade less because you will wait for better opportunities, but it's more accurate. Okay, and that's it for this lesson. Thank you.